Hey traders, welcome to another week of trading. This week's trading strategy is mainly focused on the dollar, as I believe we're really starting to see that change in narrative back towards dollar strength, and that global dollar wrecking ball really looks like it's starting to swing. So this is the dollar weekly chart, and as you guys know, if you've been following for a while, we've always been interested in this kind of 86 to 90 region as a region for a dollar bounce. We're sitting right now at the 0.786 extended level, bouncing off that region, and current market price action on the lower time frames really signifies that turn to the upside. There's no guarantees just yet. The only real belief that the dollar has turned, that probability really starts to rise when we jump above 91.60, and at the moment we're heading in that direction. So it's all about seeing what happens this week. When we go into lower time frames, it really does look like what we're seeing is corrective price action for continued dollar strength. So as you can see, we had this nice strong bounce off the lows, which I'm going to consider the first initial impulse for now. We then went into this little corrective structure. We had a nice little impulse. The call was for this to develop into an ABCDE expanding triangle, which it kind of did. And then we had a nice leg lower, which was, I believe, enough to be considered the end of a structure. As you can see, we went down towards the 0.618, so a little 1, 2, 3 down with a small wave, a 0.618 wave, and now we are impulsing back to the upside fairly strongly. So for now, that's how I'm seeing it. I'm seeing this as the first wave of a correction. Now we're looking to see how this develops. I think what's going to happen this week, my call is that this is going to start to chop sideways for the beginning, maybe the entire week. We see the dollar chop sideways. I think we're seeing yields start to recover, which maybe the dollar starts to lose some of its momentum for the beginning of the week. Then we chop higher from there, and then all of that just becomes a corrective structure. All of this is a correction of your first impulse off the lows. That's how I'm seeing it for now. Obviously, this picture could change because it's a little bit early to be seeing or to be making this call with any clarity. But that's how I'm seeing it right now. There's always the possibility, and if we start to see it, then we know exactly where we're heading in the dollar. If we start to chop back down to these lows, if we start to get a bit of a choppy wave back down to the correction of these lows, then we know all of this is correction for a little bit more dollar weakness for the next few months before we see that turn, in which case we're probably going to go and test our 70 or 87 region on the DXY. So like I said, you can only really confirm a shift in the dollar trend, or more than likely a high probability shift in the dollar trend from this 91.6 region. We need to go break these highs. And that's what I'm seeing for now. In terms of trades, we don't trade the DXY, but we can start to look for some other trades, some other pairs. The pound is a really good setup. The Oz, New Zealand, all these other smaller dollar pairs are looking really good. The euro isn't a great setup. Like I said, the euro is much about just being patient and seeing how things develop. If we start to chop back down to the lows from here, where we chop around sideways for a little while, and then we kind of push down to the lows, then we should see a little bit of a rally from there, and that's going to be our indication to go short the euro. But that's going to take a while. That's probably only going to be towards the end of next month if we see that rally. But something like the pound is already setting up for potential trades because we've had that really strong impulse off the highs. If we go out to the weekly, you can see we went all the way up to the top of the structure, and look at that candle from the top of the structure. Really big wick to the upside and a really strong turn to the downside on the lower time frame. So really looking for a pound trade this week, but I don't think anything in the early parts of the week. I really want to see a really good clean corrective structure on the hourly, and that's where I'll be looking for that pound short against the US dollar. And it's pretty much the same with all the other pairs. As you can see, look at these impulses off the highs. This is not corrective price action. This is really strong movements from the highs, and this is why I think the dollar's turned. So again, all we're looking for on these dollar pairs is nice, clean, corrective structures, and then we look for those shorts. It's across all the board on all of these. Same with the New Zealand dollar, US dollar. Same with the Aussie. Same with the US dollar CAD. Well, obviously, the US dollar CAD is the opposite way around, where we're still looking for the corrective structure, but we're looking for those longs. And longer term US dollar CAD, you can just see the same thing. We're really in that area. It's pretty much an exact replica of the DXY, but it actually has a really low correlation to the DXY, which just shows you how clean this trade is in terms of the holistic picture of the dollar. We have that impulse off the highs. We're bouncing off the 0.786, and we're starting to see some real momentum to the upside. As you can see on the hourly, that's a straight line up with no break. So we're looking for that little bit of a break, a little bit of corrective price action, and then we're trading that to the upside. US dollar yen is one I would be interested in a trade if it plays out in the fashion that I think it is, where if we get a little bit of a dip down here, I'm going to start to look at this as a little bit of a running triangle. The US dollar yen was one of the first pairs to start to show that US dollar weakness. As you can see, we've bounced all the way from January without much of a pullback from there. So we've seen upside momentum all the way from January. So I'm looking at this as a nice impulse off the lows. And now I think we're going to go into a little bit of a running triangle corrective structure. That's how I'm going to look at it, because a running triangle, as though it's very, very difficult to trade, you don't want to miss out on the upside that it provides, because if we start to see this as a running triangle, the upside target for that is more than likely going to be around about 110, 111, 109, somewhere in this region up here. So that's a really good trade to me, really good upside with potentially low downside. I mean, we can really get a good risk reward out of this trade. So I'm going to look for this little dip back. I'll probably put an entry order above the highs, but I'll look for an earlier entry if we get a flag on the lower time frames. And as you can see, this is going to be a good 2-3 to 1 as a conservative trade. But if you can get in on a flag lower down with a narrower stop loss, then you could get an even higher risk reward. So I really like this. And just a reminder, higher time frame pair or higher time frame view of the US dollar yen, and we're looking towards a 119, 120 upside, somewhere around that region. So just keep that in mind when you're looking for those trades. We could be trading much longer than just this short trade, and it should be a nice push up towards that region 120. So US dollar yen, another clean trade. Silver's looking good. We are still in our short. We managed to just skin in by the hair of our teeth. We stayed in the short. We moved down towards break even. We had a strong rally heading into the close, but I don't think anything's changed fundamentally. I still see downside at the very minimum down towards 21, 22, somewhere in this region. I'm not going to close this trade at 22. I'm going to wait for a substantial turn before I get the close and take some profit, because I'm more inclined to hold on to this for much longer, given our longer term time frame for silver, especially if we start to see the dollar move. Our silver trade, I want to hold this until $4, basically, because I think this is going to be getting some legs to the downside. I think there's a lot of traders on the wrong side of this call, and I think silver could really start to sell off really strongly. So be watching this very closely. Firstly, in this region, I'm going to hold on to this. If I end up taking a full loss on this, I'm happy with that. It's only a 1% position, so be it. But I'm more inclined to think that this dollar is going to start to move. Silver is going to start to sell off, and at the very least, we'll get 22, given the medium-term structure where we have this ABC structure. But I'm more inclined to think $4 is on the cards on this over the next kind of year, 2 years. So I'm willing to hold this for the long term. It's the same with gold. Our gold short is really in profit at the moment, really looking good. All our risk is off the table, and you can see we started to see some downside. Longer term gold, my target is still around about this 1245 region, 112 or 1200 region. I think we're going to get some legs over this week. It's looking really good in my view. If you're not in silver or gold, you have to wait patiently for entry, or just watch for silver. I think, sorry, not silver, for platinum. I think platinum's going to pop this week. Initially, we were looking at this as a potential triangle, but it's continued to rally downwards. Now it's starting to look like that flat pattern we were looking for. So we've got this little bit of a B wave, nice structure to it. If we get a little bit of a pop higher here, up towards kind of 1240, 1250, that to me is the end of a nice corrective structure, nice running flat for downside. So that to me is a great sell. If you can find the setup, that's worth taking. If silver is in profit by the time this starts to happen, although I don't see that happening because they should move in tandem, but if by any chance we start to see platinum outperform silver, as in silver hangs around where it is, and I can move silver to break even, I'm probably going to take platinum as well. So I'm happy to be in silver, gold, and platinum because I'll only have one unit of risk on the table at that point. If silver's not in profit while platinum's up in this region, I'm going to let this one go. Maybe look at putting an entry order below the lows if silver moves into profit before then. But like I said, if you're not in any of the silver or gold trades just yet, this is a really nice setup to get into those trades moving forward. So wait for the move up. Conservatively speaking, an entry below these lows is the way to play it. Stop above the highs, even above the high of the C wave, I think should work. Otherwise, you can look for a kind of flag entry higher up if you want to be a bit more risky. Moving away from the dollar, our euro pound trade looking really good. As you can see, I'm looking to this to get up towards kind of 92. So giving this some room to breathe. We had a nice, really good push off the lows. If this starts to chop back down to the lows, I'm going to take break even on this. I'll probably move this to break even early on the market open. And I'd like to see this actually develop into a little bit of a corrective structure on the lower time frame, something like that. That's what it's looking like at the moment. I'm still super bearish the pound. So this should continue to play out pretty nicely. If we start to see something corrective, I may get a little bit cheeky, move this to break even, put in another entry, and a little bit of a scale in trade on a lower risk, just because the upside still looks really good. Counter to that, which could be a good trade, is the euro yen. I still think euro yen is going to pull back. When we look at the structure is still really good on this kind of 8-hour time frame. As you can see, really clean ABC corrective structure. That's really clean. And I don't think I'm going to take the short. But if we start to see this long play out down in this region, that is worth playing. That's a really good trade down at 123. From the higher time frame point of view, we should see the euro get above 137, probably back up to these highs at 150. So longer term, this is a really good trade to the upside. So any trades you're taking on the lower time frames to the downside, this short is against the trend. Not to say I wouldn't take it. If I get a really clean setup on the hourly, I will take this trade down to 123. But I'm more inclined to wait it out and see how things develop. It should be quite a quick move down towards this 124 region. So you might get caught unawares. But again, it could be a good trade to the downside to flip around back to the upside if you want to get cheeky with it. So it's looking really good. I like the setup. In terms of the short, for me to get short this trade, as you can see, look how volatile these waves are already. So these volatile waves are really hard to trade. If I had to have a nice little clean flag, I would have taken that. But I think this is just going to start to accelerate to the downside. It's going to be really hard to get into. I'd have to see a really clean setup that's worth taking to the downside. Something, let's see if we can find something. Yeah, nothing really. At the very least, I would have to see something like that, like this latter portion, something along those lines. But even then, it's not very clear. So I'm more inclined to let this one run. We've already got a lot of trades on. There's no point looking for trades that aren't really there. But if I get a clean setup, like I said, I will take it to the downside. Euro New Zealand, another trade that's played out really nicely for us. Upside target, I think we should get to pretty quickly if it continues this way. But upside target is around about this 173 region. Let's just see. Full upside, 173.75. So can expect this to continue pretty strongly in our favor. We may get a bit choppy, as my guys know what we need to look for, alternation in waves. We might get a little bit choppy in this, but I really like the start of this trade. I'm really deeply in profit at the moment. I can take risk off the table and then just sit and notice what happens. Just let it be and look for some other trades, which I'm really happy about. In terms of getting into the trade, you'd have to see something really clean and corrective. It's that same vibe on the dollar, really. We've had some really strong moves. Now you need to see some really good, decent corrective structures before you can get in with conviction. Pound Oz is a different story. I think we're still going to see downside on this. I'm still playing this as an ABCDE expanding triangle. Nice push off the highs, A, B, C, D, E. This E wave has been a bit tricky, trying to find the top. But as you can see, it's a nice 1, 2, 3 structure now. So if we start to see this fade, especially with my bearish pound views, this dollar trade is a definite take. This pound Oz trade, sorry, is a definite trade. So if we start to see this fade to the downside, I'll be really interested in taking this trade. And what's really nice about this trade, which could give you some good probabilities of getting in at a good level, is that we really overcooked on the hourly, as you can see. It's been pretty much a straight line up. So if we start to see a shift to the downside and a little bit of a flag, then I'm definitely going to take that trade with a nice wide stop to give it some room to run out of breath and maybe just get our break even if we have the higher structure wrong. But right now, what I'm seeing is pretty much an impulse, correction impulse. So in terms of upside target of this wave, we're sitting at the minimums. We could get up to 83. That doesn't really change the picture. I'm still looking for that short. And like I said, a nice wide stop will really be useful here. Downside target is really good. I think the pound is in a lot of trouble here. It's really looking weak against a lot of these pairs. I think they're going to negative interest rates, and those negative rates are not priced in. Everyone thinks that that's off the table. Downside target 151. So really good looking trade available there. Same with the pound Swiss. Pound Swiss touched on its highest, or right at the top of the target, looking like a really extended wave. If we can see, we're touching on that 0.786 region. And when we go into the lower time frames, you can just see how overextended this wave is. So I'm still looking for shorts on the pound Swiss. Pound yen, same story. I'm just looking for that clean setup. We may have had the first wave of that setup. So if we can start to get some nice corrective pattern structure down to the lows and then another pop higher, that is a really good entry. Same with the pound yen, as you can see, really clean. Looking to get vindication for the little loss I took last week or this week. And downside target, again, looks really good. Downside is going to go break these lows and probably head lower than that. Pound New Zealand. Pound New Zealand popped higher, interestingly enough. You guys saw my Friday breakdown, what we were looking for. So if we continue to pop higher here, like we are in the pound, it doesn't really change things fundamentally. I'm still looking to sell this rally probably up here in this region. Higher time frame, really clean. I really like it to the downside. So that's looking good too. Aussie dollar Swiss is another one, reached its full target, or not full target, actually reached its minimum target. But when you look at the reaction of that target, it's really hard to believe we're going to turn from here. That is a massive impulse off the highs. So again, it's that same setup. We're just looking for corrections. We're looking for the turn. We're looking to get in and we're looking to hold. Aussie yen, same story, looking to get in, looking to hold. It's really risk off at the moment. Global equities, which we'll get to a little touch on a few of them later, also looking really weak, which means we're in a really risk off scenario right now. Capital is going to start to flow into the dollar, and then everything else is going to fall, in my view. New Zealand dollar, yen, same thing. You're seeing the same trend all over the place. We're not definitely going to take all of these trades. That's not good risk management. We're looking for the cleanest setups out of all of these and looking to get into those to hold for the long term. Swiss yen, a little bit different. I'm looking for this whole leg to develop into something corrective. This is outside the scope of everything else, which I like. So it's a bit different from every other trade, but the payoff is still really good. When we zoom out, I think the Swiss is going to take a lot of damage because they are so overly invested in things like equities. Like their central bank has bought a whole lot of equities, etc. They have access, or through those equities, they have exposure to Bitcoin, which I think is going to be falling as well. So I think the Swiss is going to get hit hard, and the Swiss against the yen is a good trade to trade that trade. As you can see, structure-wise, not the cleanest structure ever, but I suspect if we continue to the downside, we're going to go test 106, which is a really big trade as well. So if this starts to set up and look like that downside is coming, then we're definitely in the game. UK oil, as you know from Friday's session, we were looking for a little bit of a flag to get in and trade, but we just fell. There was this little flag here. If you were in it early, you're getting those payoffs really well. But as you can see, we've just missioned to the downside now. So again, just looking for those corrective structures on the lower time frames to trade and get short. Basically looking to get short anything that's priced in dollars, Bitcoin included. Zoomed out, structure-wise, you can see how clean and clear our structures are on oil and why we're looking for downside. ABC, impulse up, went to touch that 1-to-1 region, and now we're pulling back. So we're right in that area where you expect at least a pullback in oil, but I'm more inclined to think this is going to be a bit more extended than that. TLT I've put on the cards. This is the 10-year or 20-year bond ETF. I think bonds are going to get a bid this week after they were selling off last week. We should see, keep in mind these arrows were drawn in early December or early Jan. So we played that pretty much to the T, or played out to the T. What we saw was a big dip in yields. We saw a big dip in bonds, yields rising strongly. I think bonds are going to catch a bid now on this big sell-up, on the big risk-off trade that we're going to see now. This should rally, and this is going to run out of steam and get some legs to the downside, probably on some Fed intervention up here, somewhere here. I think the Fed is looking for inflation. That isn't really on its way. I think we're going into risk-off deflation, but that's all. The narrative is really up to guessing, but the charts are really saying the same thing. We're going to see some risk-off period moving forward. The Nikkei is a good example. If we go to the structure of the daily, you can see how we've pushed up, went into correction, pushed up right into that 1-to-1 region, and we're pulling back from there. And when we go into the higher time frame, we see the same thing. We have two structures really. Impulse off the lows, A, B, C, D, E, push up, touching on the 1.618 region. And then one more of those when we look at structure-wise. Actually, no, I'm not going to do that one. It doesn't count. But this, to me, is starting to play out as a really nice looking, drawn out corrective structure. So we should see this pull back. Impulse down, ABC up, nice little expanding triangle in the middle. We like to see B waves as triangles. That makes the most sense. And now we should get that C wave down to around about 21,500, I'm guessing. But when you look at the percentage drop to that region, that's a good 30% drop. That's a good big market move. EEM is another one, going all the way out to the monthlies. You can see how EEM is sitting right in the danger zone with a massive pullback candle. Look at that monthly closing candle. Two actually. So that's a tweezer top on EEM. Downside target 2150 on EEM. So you can expect this whole reflation emerging market trade to unwind really quickly, and you'll see EEM drop potentially around about 60% over the next few months moving forward. So keep a close eye on EEM to be a good bellwether for what the market's going to be doing moving forward. And what that means for Bitcoin, I know your Bitcoin bears are going to hate me for this, but I think we're right at the top of this structure. If we zoom out, you guys know what I was looking for moving forward. We were looking for another big drop from these highs. We're looking for this as an ABC. We're in the C wave now, I believe. We just started the C wave. That's why we've seen such a big dip of these highs. And we should be going down towards, I think we should break 20,000 once again. That's my call. That's going to be an amazing buy on Bitcoin. We may even get down to 15. I think we're in for a big dip. That's what I'm saying. It's early days, though. We need to see how this plays out on the lower time frames. And to me, it's starting to play out really cleanly. We've got a nice impulse off the highs, 1, 2, 3 up. We've been pushed down. We've gone into the sideways chop. We should pop higher, probably to start the week. Drop down from there, pop higher from there. All of that is a big ABC running flat for downside. So as you can see, it's really speculative right now. It's really early, but if you start to play out, or we see things start to play out in this fashion, you can expect the next move to be a big chop down, especially if we see the dollar moving. Ethereum, same thing. As you can see, we broke out of this ascending wedge. I was really concerned about price action in this region, and we started to drop. You guys know I was cautious crypto, and that caution was warranted. Ethereum starting to play out even cleaner on the lower time frames because we've already had that chop. Yes, they're just excuse. These candles here really mess up the chart, so you have to kind of look cleanly. So you have a nice A wave up, nice chop down. We should see a little bit of a rally up towards kind of 1600, and that's your ABC, and that's the end of Ethereum for a while. We're going to see a really strong push down from there. Higher time frames, you can see what I'm looking at is a move down back into triple digits at the very least, probably around about 300, I would imagine, is the downside target. We have to see how things play out. Things got really frothy with crypto, so we have to see how things are going to play out moving forward. I think a lot of people are going to take this 2017 bubble as a sign or as a indication of what to expect moving forward, and we might just see some really strong downside as people sell out in the weekend sell out. So yeah, I'm bearish. I'm not bearish in the long term. This is going to be an amazing buying opportunity. Ethereum especially, I think, is a really good buy. Bitcoin is going to be a really good buy down at this region, wherever it's going to be, 20,000, 15,000, whatever the price ends up being. I think we're in for a really, really good rally following this dip, because that's when the Bitcoin fundamentals really start to take hold. And that's when the narrative where all the real maximalists have been trading, where you want to hold Bitcoin as a reserve asset, that's when this trade is really going to go. But we still have one leg of dollar strength to come. That is my view. And that leg of dollar strength is going to do a lot of damage to the global economy. And that's what we're seeing now. And that damage is going to be corrected by things like Bitcoin and Ethereum, where the new financial system comes into play after that real destruction. So that's what I'm seeing on the charts. Don't hate me for being bearish crypto. I'm just telling you what I see. I'm seeing dollar bullishness, I'm seeing risk off, and I'm seeing some really, really good trades moving forward. If you guys want to sign up for membership, head over to the link below, Senecalytics/Trading Academy. I promise you, your membership will pay for itself this month with the way the charts are setting up. So take my word for it. Join us in the academy, and we'll see you in tomorrow's trading strategy session. Cool, guys. Enjoy the rest of your weekend. We'll chat then.